Mr. Kάμερ, thank you very much for speaking to ERT.
Thank you.
I will start with the European economy, my first question. The IMF has recently cautioned that Europe may be slipping into economic stagnation, with geopolitical tensions, trade disputes, sluggish investment, and limited growth prospects posing significant challenges. Do you see a realistic path forward to mitigate these risks and reignite momentum?
First of all, I think our message on Europe is a bit more positive. We are seeing a continuation of the recovery from the pandemic and the Russian gas shut-off. That is continuing. But you are absolutely right to point out that we reduced the growth forecast a bit for 2025 and 26. We reduced it by 0.2 percentage points, reflecting the headwinds which are coming from geo-economic developments, in particular the impact of tariffs and the uncertainty created for investment by these tariffs. So we are seeing a continuation of the recovery. And growth is going to increase from this year to next year, slower than expected, but that happens. I think where we were warning is with regard to the medium-term growth prospect, and they are clearly too low for Europe, and they need to be higher. Europe's per capita GDP in purchasing power terms is 30% lower than that of the US. That was not always the case. And actually there is a solution on narrowing this gap, increasing the income of the European people, and that is a reform program we have been discussing with European ministers in order to actually do better on growth, do better on income generation for the population, and essentially to then maintain the welfare state, the states we have in Europe.
My second question has to do with tariffs. Ongoing negotiations between EU and United States have drawn significant attention. But you have also pointed that to substantial internal trade barriers within Europe itself. Could you elaborate on some of these barriers and explain what's holding back deeper economic integration within the EU?
Yeah, we found that if Europe wants to increase its productivity and wants to increase its income, one of the things it can do, and it has fully under control, is continuing working on integrating the single market. And that integration of the single market is just not the same as we have in the US. And what it means is it's missing the opportunity of dynamic firms scaling up across, investing across, accessing capital markets in order to grow, and thereby generating the income which American firms in the US are generating. So we have four proposals. One is reduce the barriers for product and services between European countries. Second is actually increase labor mobility between countries. The costs of moving from one European country to the other are 8 times as high in Europe than moving from one state in the US to another. And that doesn't allow talent to go where talent is actually most productive. Third, we need deeper capital markets in Europe, and they need to be pan-European. They are too fragmented, and therefore they are not producing the equity, they are not producing the venture capital, which new firms, startup firms, technology firms actually need. And final and very important point is we need a better integrated energy market in Europe, both in order to lower energy costs, but also to lower energy independence and thereby increase energy security. And there are lots of opportunities actually to do that, including at the European level. And many of these reforms you do at the European level and you coordinate at the European level, and they are actually reducing the costs of these reforms. But not to forget, always think about national reform efforts as well.
Do you think it's possible for the European Union to do all four of that?
We think it's possible. When I'm very encouraged when we are talking to ministers, they agree on the diagnostics, what needs to be fixed. They also agree on how it should be fixed. The devil is always in the detail. And when you look at each reform measures, every minister then needs to go home and deal with the political national interest and also the vested interest in the country. We are proposing a helpful tool in that respect. Don't agree all of these reform measures one by one. Package them, put them together, and then move them as a package for agreement. We put such a package together with, in these 4 reform areas with a startup of reform issues. And even some limited reforms in all of those 4 areas would increase the level of GDP in Europe by 3%. And what is remarkable when you're looking at who are the winners and losers among countries, there are no losers. Every country wins between 2 and 5% of GDP. And that's something ministers should be able to sell to their population, that the country actually wins undertaking these European reforms. And that is important to remind everybody of. A lot of the income generated in every country is actually the result of having that single market. And the deeper single market will generate more income country by country.
Greece has achieved a remarkable reduction in its public debt, one of the sharpest improvements in Europe. Do you believe current forecasts suggesting that Greece may no longer hold the highest debt to GDP ratio in the euro area by 2029 are realistic?
What we saw is a drastic reduction in debt over the last four years by almost 60 percentage points. Truly remarkable, and really one needs to give credit to the government of being prudent. Helpful in all of that was that at the same time real GDP grew by 20%. Also a stunning success and setting Greece really apart from other European countries. So growth helped, and growth was helped by structural reforms the Greek government implemented, and growth was helped by public investments through the RRF. What does that mean for the future? For the future it means 2 things. First, fiscal prudence is going to be key, and we are seeing the plans of the government to further bring down public debt by 2029, by 2030, and that will actually be a big helper in terms of stabilizing the economy. But it also must be paired with creating fiscal space for public investment, which is still too low, and some spending reforms on the education side and on the health side, where better spending and sometimes more spending will deliver important outcomes. Second point, it needs to be paired with continuing structural reforms, because in the end, these structural reforms create the growth required and the income required, and that will also again stabilize the fiscal situation. The fiscal situation is not the ultimate goal. The ultimate goal is to increase the living standard of people, and only structural reform can actually deliver those in a stable macro environment, and for that we need to have fiscal sustainability.
The Recovery and Resilience Plan represents a major opportunity for Greece, but its implementation is set to conclude next year. In your view, has the plan succeeded in addressing Greece's external imbalances, or is further progress needed? And something else, what are your expectations regarding the country's fiscal trajectory going forward?
Yeah, the RRF has helped Greece, both in terms of increasing public investment, which is so important to create that environment, an enabling environment for the private sector. And that is public infrastructure, that is the electricity net. All of those are enabler for private investment, and private investment in Greece is still too low and needs to increase. And that public investment component is important, and the RRF has delivered on that. The second part the RRF has been delivering on, it's providing an incentive to countries to do some of the hard structural reforms. And only those structural reforms in the end are going to generate an increase in the potential GDP in the medium term, which is required. what it also means that in future, without these RRF funds, the Greek government will to create that fiscal space to continue spending on these priority public investments. More needs to be done, and that needs to continue. And the Greek government will also need to continue the successful implementation of structural reforms, very much like in the rest of Europe. One focus really needs to be on labor, human capital, workers. And here one common theme across all of Europe is the biggest growth driver in the reform effort will actually be coming from interventions on human capital. And what is it what we need on human capital? We need training, we need lifelong learning, we need upskilling. Technological progress will probably speed up in the future, and that requires a workforce which can go to the most productive work there is. And for that, you always need to update and improve the skills. And that is something which is going to be important for the Greek economy, and it is also important for all of the other European countries.
Some analysts argue that Greece must broaden its productivity base and enhance competitiveness to ensure long-term growth. Do you share this assessment, and what key reforms do you believe that are essential to achieving these goals?
Yeah. I absolutely share that assessment. These structural reforms are key in order to generate the growth for the future. And this growth for the future is required in order to maintain a modern welfare state. There will be further spending pressures coming our way, not just in Greece, but also in Europe more generally. And for that, you need to have higher growth rates. And for that, you need to have productivity. And in order to get that, you need to have those structural reforms. So one example I mentioned already is on the labor market, on the education, on the lifetime learning. That is a reform issue for everybody. For Greece in particular, another reform area is judicial reform. Big success in terms of getting a modern bankruptcy law. But now what we are seeing is, in order to actually execute it, it still takes too long. It takes over 2.5 times longer than in the average European country. And that needs to be fixed. And I would say Greece has made tremendous progress on the energy and electricity side. More than 50% of electricity is now produced by renewables. That's a huge success. And last year, Greece, for the first time, was an electricity net exporter. This is a European project because energy is still too expensive and energy prices are too volatile. That is something Greece needs to focus on, but also in a European context in order to have an energy market with lower costs, and that will help companies to produce and be more competitive globally.